Warren Buffett, one of the most successful investors of all time, has often shared his wisdom on investing. He has consistently emphasized the importance of investing in assets that grow in value over time. While cash might seem like a safe option, it loses value due to inflation.
When you look at the future, there's also the argument made that this is something that goes with your philosophy today. Get out of cash and get into assets, because we don't know what's going to happen to the dollar.
Well, cash is always a bad investment. I mean, when people said cash is king a year ago, I mean, that's crazy. I mean, cash wasn't producing anything, and it was sure to go down in value over time. On the other hand, you always want to be sure you have enough. I mean, it's like oxygen. You want to be sure it's around, but you don't need to have excessive amounts of it around. And cash, we will always have enough cash around. But anytime we have surplus cash around, I'm unhappy. I mean, I would much rather have good businesses than cash. And we found a chance in the last year or thereabouts to deploy. We came in with something over $40 billion in cash, and we've got about $20 billion now, and we've had some earnings. So we put a lot of cash to work, and I like that. No, I'd much rather own a good business than have cash.
Holding on to cash might seem safe, but it's important to understand that cash loses value over time due to inflation. Inflation is the rise in prices of goods and services over time, which reduces the purchasing power of money. For example, if inflation is 3% per year, $100 today will only be worth $97 next year in terms of what it can buy. This is why Buffett suggests investing in assets that grow over time. As Buffett wisely said, "Do not save what is left after spending, but spend what is left after saving." By making smart investment choices, you can build wealth and secure your financial future. Remember, the goal is not just to preserve your wealth, but to grow it steadily over time. Let's explore 9 assets that Warren Buffett considers better than cash, including gold ETFs, and understand why they might be better options for growing your wealth. 1. Stocks. Stocks represent ownership in a company. When you buy a stock, you become a part owner of that company. Warren Buffett believes in buying stocks of companies with strong fundamentals and potential for long-term growth.
I want to talk about the letter. Obviously, one of the things that you touch on in the letter is when people should be buying stocks.
The very first day I bought stocks was March 12th, 1942. And the stocks were down about 2% that day, as it turned out. Unfortunately, I bought in the morning, so when I came home in the evening and my dad told me the execution price, it was down 2%. But if you're buying a business, and that's what stocks are, businesses. In fact, people will be better off if they say, I bought a business today, not a stock today, because that gives you a different perspective on it. Then presumably you're going to buy a farm, if you buy an apartment house, if you buy a business, you're going to own it for 10 or 20 or 30 years. And the real question is has the 10-year or 20-year outlook for American businesses changed in the last 24 hours or 48 hours? And you'll notice many of the businesses we own, partially own. American Express, we've owned it for 20 years. Coca-Cola, we've owned it for 40 years. Those are businesses. And you don't buy or sell your business based on today's headlines. And if it gives you a chance to buy something that you like and you can buy it even cheaper, then it's your good luck, basically.
Warren Buffett buys stocks with a disciplined approach focused on long-term value and fundamentals. He looks for companies with strong earnings, good management, and competitive advantages. Buffett prefers businesses with a consistent and predictable performance, avoiding those in rapidly changing industries. He values stocks that are priced below their intrinsic value, providing a margin of safety. Buffett's strategy involves thorough research and understanding of the company's business model, financial health, and market position. He famously said, "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price." Buffett avoids market timing, choosing to invest when he finds a stock meeting his criteria and holds on to it for the long term, allowing the company's growth to compound his investment. This patient value-oriented approach has made him one of the most successful investors in history. Number 2, real estate. Investing in real estate can be a smart move. Real estate tends to appreciate over time, and you can earn rental income from properties you own. Buffett has invested in real estate. understanding its potential to generate steady income and appreciate in value. Plus, real estate is a tangible asset, meaning you can see and touch it, which many people find reassuring. 3. Gold ETFs. Gold ETFs, exchange-traded funds, are another good alternative to cash. These ETFs track the price of gold, allowing you to invest in gold without physically holding it. Gold is often seen as a safe haven during economic downturns, and it has historically retained its value over time. Buffett once remarked, "Gold is a way of going long on fear," highlighting its role as a protective asset. 4. Bonds. Bonds are essentially loans you give to governments or companies in exchange for regular interest payments, plus the return of the bond's face value when it matures. Bonds are less risky than stocks and can provide a steady stream of income. Buffett recommends diversifying investments, and bonds can be a stable part of an investment portfolio. 5. Index funds. Index funds are a type of mutual fund that aims to replicate the performance of a specific index, like the S&P 500. These funds offer broad market exposure and low fees. Buffett has praised index funds for their simplicity and effectiveness, saying, "A low-cost index fund is the most sensible equity investment for the great majority of investors." Warren Buffett advocates for buying the S&P 500, especially for individual investors, as a practical and effective investment strategy. He recommends investing in a low-cost S&P 500 index fund, which offers broad exposure to 500 of the largest companies in the U.S., providing diversification and reduced risk. Buffett believes this approach is ideal for those who may not have the time, expertise, or inclination to pick individual stocks. He has famously said, "Consistently buy an S&P 500 low-cost index fund. I think it's the thing that makes the most sense practically all of the time." By investing in the S&P 500, investors can benefit from the overall growth of the stock market over the long term. Buffett's own estate plan includes instructions to allocate 90% of his wealth to an S&P 500 index fund for his wife, underscoring his confidence in this strategy. 6. Dividend stocks. Dividend stocks are shares of companies that regularly pay dividends to shareholders. These payments can provide a steady income stream. Buffett himself is a fan of dividend stocks, especially those of companies with a strong track record of increasing their dividends over time. This aligns with his philosophy of investing in businesses that generate consistent cash flow. Warren Buffett buys dividend stocks by focusing on companies with strong, sustainable dividend-paying histories and solid financial health. He seeks out businesses that consistently generate high earnings and have a track record of increasing dividends over time. Buffett values firms with durable competitive advantages, stable management, and robust cash flow. He prefers companies that not only pay dividends, but also reinvest a portion of their profits back into the business to fuel future growth. Buffett's investment strategy emphasizes the importance of understanding the underlying business and its long-term potential. He famously said, "The best investment you can make is in your own abilities." Anything you do to improve your own talents and make yourself more valuable will get paid off in terms of appropriate real purchasing power. By investing in dividend stocks with strong fundamentals, Buffett aims to achieve a reliable income stream while benefiting from the appreciation in the stock's value over time. 7. Business ownership. Owning a business can be highly rewarding. When you own a business, you have control over its operations and can directly influence its success. Buffett himself prefers to own entire businesses through his company, Berkshire Hathaway, because it allows him to benefit from their profits and growth directly. His approach is simple: buy a business, don't rent stocks. 8. Mutual funds. Mutual funds pool money from many investors to buy a diversified portfolio of stocks, bonds, or other securities. They are managed by professional fund managers. Buffett believes in the value of diversification and has often advised average investors to consider mutual funds as a way to achieve a balanced portfolio without needing to pick individual stocks themselves. 9. Treasury inflation-protected securities. Tips. TIPS are a type of U.S. Treasury bond designed to help investors protect against inflation. The principal value of TIPS increases with inflation and decreases with deflation, as measured by the Consumer Price Index. These securities provide a hedge against inflation, ensuring that your purchasing power is preserved. For conservative investors, TIPS can be a secure alternative to cash. If you enjoyed this video, I would really appreciate it if you would gently tap the like button. It helps out my channel a lot, as the almighty YouTube algorithm sees that people like these kinds of videos and shows my content to a bigger crowd. This allows more people to start improving their lives. As always, thanks for watching, and I hope this video made you better than yesterday.